the closing bell at the New York Stock Exchange, signaling the end of the trading day. The Dow spent most of the day down, but did rebound to close the day up around 250 points. The Dow cut almost a 500-point intraday loss. The S&P 500 climbed 0.5%, while the tech-heavy NASDAQ Composite gained over 1.2%. So joining us now to talk more about all of this is Alexandra Semenova. Alexandra is a reporter at Yahoo Finance. Alexandra, welcome. Great to have you with us.
Thank you so much. Great to be here.
So what was driving the market today?
So today we saw stocks claw back from some of those earlier losses, but very much still a choppy trading session. A lot of pressure on markets from some of those headwinds that investors have been grappling with. That's inflationary pressures, supply chain concerns, and of course the Federal Reserve, looking to move in on its rate hiking plans, and that really weighing on investor sentiment. But to add to that, today we had an added headwind from China, renewed concerns over the COVID situation there in Beijing. They ramped up their testing, and there are worries now that they might implement another COVID lockdown, which of course could weigh on supply chains and kind of dent the global economic picture. And that really spooked investors today.
Absolutely. Let's get back to that Federal Reserve wanting to increase interest rates even more to tackle inflation. How big of a concern or not is that to investors?
Well, this has been, a big theme this year driving markets. We have been accustomed over the last 2 years to a very low interest rate, a near zero interest rate environment. And it's going to be a big change for investors as the Fed kind of lifts off its interest rate levels, and it becomes more difficult for companies to be borrowing, kind of weighing on their growth prospects and on their corporate margins. So that has been a big theme among investors, and they're going to be looking to see what the Fed does. There's been talks that next week we're going to see another interest rate increase of 50 basis points. Last month we saw 25 basis points, and investors just appear to be upping their forecasts over and over again as inflation kind of stands at decades high levels, and the Fed says that it's going to work more aggressively to rein in inflation levels.
And you did mention this earlier, but of course fears are once again growing over an economic slowdown, global slowdown that could start with this spike in COVID cases in China and sort of the ripple effect of all of that. Are we experiencing that already, or is there room for this to get worse?
Well, it's certainly too soon to say, but there are a lot of crosscurrents that are just weighing heavily on sentiment. It's a combination of so many factors. You have the war in Ukraine weighing on supply chain issues. You have renewed lockdowns in China. You have inflation levels. Investors have been kind of waiting for inflation to peak, but the numbers keep edging higher and higher, and there's so much uncertainty about what the Fed will actually do to combat inflation, and also worries that if they act too aggressively, then that could actually dent the economic picture and result in an economic slowdown.
And really quickly, we know the news came a little late in the trading day, but how did the markets respond to the Twitter sale to Elon Musk?
Well, certainly, that was a big theme as well today. Trading was halted at the end of the session. It was a big deal because, for the past 11 days, we've seen this saga play out, and it kind of started out as, somewhat of a passive stake for Elon Musk. He took this 9.2% stake in the company, and everyone was expecting that, he may or may not do something there. And then within the span of 11 days, we just, we're seeing now Twitter accept his offer, which could be a good thing for the company because it's been dealing with a lot of concerns around censorship and a new CEO, the departure of Jack Dorsey. So it seems like investors are kind of optimistic about what might happen with Twitter.
It seems like a done deal, but of course, I never say these things are done until the ink is dry, right? All right. Alexandra Semenova, thank you so much for joining us. We appreciate your insight.